Hello. All economic fundamentals that we have learned throughout the years are telling us that we are heading towards one of the most deep recessions in the history of mankind. Let's cover together in this video most of the indicators that implies that we are heading towards this recession. Our table of content is going to follow a top-down approach, going from high inflation leading towards banking crisis and housing decline, towards consumer confidence declining and government debt and fiscal issues increasing to fight this inflation and geopolitical events happening around the world. Then we are going to cover currency decline, the stock market decline, and finally an overall view of geopolitical events happening around the world and how does they affect economy. Let's brainstorm together. As a consumer, what's the first indicator that indicates that we are heading towards an inflation? A consumer typically notices inflation when he's going grocery shopping and suddenly your bill comes up 10, 20, 30% up. Well, why does this happening? Is it the grocery shop that's earning more money, or is it inflation that's eating your wages? A quick look at our inflation indicators CPI and PPI, which are two major inflation indicators that may be familiar to you if you have followed our previous videos about CPI and PPI. Those are the consumer price index and the producer price index, two inflation rate indicators that tells you how price changes towards the years. While the CPI, for example, was 230 in 2014. This 230 is now 310 in 2023. A 30% increase in the consumer price index tells us all we need to know. Inflation has increased more than 20-30% on the consumer price index indicator, which implies that every grocery shopping, every price around the world is going to increase with it. But what's the core of the problem? Why did we reach this phase? Well, let's take a quick look at our second graph, which indicates the cash liquidity supply, all the cash that has been printed throughout the years. What's the golden rule here? As you print more money, it's going to lose its value. As you print more money, people are going to need more of this printed money to buy grocery shopping, which leads us towards inflation. Taking a look at the graph and from general knowledge that has been indicated before, we know that in the 4 years gap from 2019 to 2022, we have printed more US dollars than we have printed from the 1960 to 2019. That implies everything about the cash supply problem. We have printed too much money. We are in deep problems because of this money that we have printed, which is heading us towards the deep inflation that we have seen in the graph before. Well, I know what's the question that's on your mind right now. Why did we print this much money? Why did we get ourselves into this problem? Our third sector is a very familiar sector for every investor that have been throughout the 2008 crisis. Covering our banking sector crisis, we have three major American banks, Citigroup, JP Morgan Chase, and Bank of America. Bank of America, for example, has lost more than 22% of its value since its high value during this year till today. Even if we take smaller banks such as the First Republic or the Silicon Valley Bank, these banks have gone bankrupt in 2023 because of the banking sector crisis that we are talking about right now. With every banking crisis comes a home crisis. Let's examine the data that we have on residential property prices plus mortgage rate in the US. Taking a look at the graph, we can see as the US mortgage rate goes up towards 7%, the residential property prices are going down. Examining our second graph, which covers the average housing price to the average income in the UK, we can see that the ratio has doubled from the 1980 till 2023, which means it's twice as hard today it is to buy a house in the UK with the income that we have compared to a person in the 80s and the 90s, which had it much easier for him or for her to buy a house in the UK. Our next sector is going to cover consumer spending. Consumer confidence has seen a noticeable decline in recent months, as economic uncertainties and rising inflation has eroded optimism amongst the public. This downturn in sentiment reflects concern about the cost of living, job security, and the overall state of the economy, which could potentially impact consumer spending patterns and investment decisions. Taking a look at our graph, we can see that the consumer confidence has weakened a lot in the recent years. Pessimism is eating the market, and we are at our 3 years low in terms of index. Our US Michigan consumer sentiment and our US economic optimism index is at its 30 years low since 2000. Our next sector is going to cover government debt and fiscal issues. This sector is going to cover how did the government finance geopolitical events happening around the world and how did he fight inflation. Taking a look at the graph and focusing on everything that has happened after 2020 tells you all you need to know about the government spending. After 2020 and during the COVID period, during the coronavirus period, the US government has decided to distribute stimulus checks to the US population, which has led to an increase in the government spending, financed by the money supplied, the second graph that you can see below, the money supplied, the monetary policy, the Fed, which has printed a lot of money to finance this government spending, the stimulus checks to the population. And our next graph, you are going to see the US total debt, which has risen dramatically also in 2020. How did the US government finance all the stimulus checks and the geopolitical events happening around the world? Well, by printing money, that's one, and by taking debt, that's the second one. Both of these factors have increased inflation a lot and has led to the CPI reaching very high index indicators. And to make things worse, the US government has just requested $106 billion from the Senate to finance geopolitical events happening around the world. Let's talk now about our most important subject. How did this economic crisis affect the stock market? The Dow Jones Industrial Average is a price index indicator of the 30 biggest corporations in the US. This index, which is used to make at least 10% annually, has now lost more than 8% of its value from the end of July till the end of October, marking one of the biggest downfalls in the history of the stock market during a short period of time. Continuing with our top-to-bottom approach, let's go from index to companies. Taking a look at Alphabet, which is one of the components of the Dow Jones Industrial Average, we can see that this company, during the last few days, has lost 10% of its value, one of the worst days in the history of the company since March 2020, which is during the coronavirus period. Also, 200 billions of market cap were wiped out during that day. Our next graph is one that we have covered before in our previous video, correlation between US yields, gold, and the stock market. Our graphs start with US Treasury yields, which is the risk-free rate on the market, the rate that the US government gives you for lending it money. As the yields goes up, the DJIA, the stock market, typically goes down. There is an inverse relationship, inverse correlation. And between the US yields and the gold, there's an inverse relationship in the short term. So as the yields go up, people are going to lose interest in gold and invest in bonds. And in the medium to long term, as yields reach alarming rates such as 5% reached 2-3 days ago, the gold is going to follow the US yields, and the correlation is going to switch from negative to positive correlation, where the gold has reached new highs during the last period, 1980 and 1990. Our next and final sector is political events and geopolitical events' impact on the economy. All we need to know in this graph is that the US military expenditure has gone drastically up from the Cold War till today. With every geopolitical events happening around the world, US military expenditure is going up. Taking a look at our first graph, we can see also that US weapons sales has gone drastically up during 2020 till 2023, with all geopolitical events happening, and the economy is taking a big hit out of it. Our last and final graph just shows us military expenditures around the world. We can see that the United States, ranked first, spends more on military than the next 30 nations combined. You can also notice that China has been drastically increasing their military expenditures, now ranked second with $300 billion in military expenditures. To sum up, every major indicator that we have covered in this video tells us that we are heading towards a major economic crisis. Now the big question is when, and stay updated with us on our next video to answer this question.